Welcome to ForexTV.com's New York Forex Market Buzz. It's Tuesday, June 2nd. I'm Julie Sinha. In today's headlines, the Australian Bureau of Statistics posted a seasonally adjusted current account deficit of $5.08 billion in Q1 of 2009. In the U.S., pending home sales rose sharply for April. The report showed that the pending home sales index rose 6.7% to 90.3 in April from a reading of 84.6 in March. Economists had been expecting a much more modest increase of 0.5%. In the Eurozone, the Luxembourg-based statistical office Eurostat said the seasonally adjusted jobless rate rose to 9.2% in April from 8.9% recorded in March. This is the highest rate since September of 1999. The U.S. dollar dropped to its lowest level versus the euro this year today. Joining us on the phone to share his opinions and FX forecasts is Ruesch International's senior market analyst, Omer Esiner. Hi, Omer. Thanks for joining us again.
Thanks for having me.
So, Omer, let's talk about the dollar. It dropped earlier to its lowest level against the euro this year on speculation that record U.S. borrowing will undermine the greenback. Did you see this news helping the dollar traders just want to sell off, or did you see more of a technical play today?
Well, I think it's a little bit of both. As you mentioned, that one of the main causes of the recent dollar weakness has been kind of these nagging concerns about the longer-term fiscal outlook for the U.S., and I think that is going to be an issue that weighs on the dollar for the foreseeable future. To that, I would add also the broad improvement in risk appetite that we've seen for the better part of the last month and a half or so. That has driven investors out of relatively safe dollar-denominated assets and into higher-yielding assets like commodities, like some of the commodity currencies, and into equities. So I think those two factors are really what's driven the dollar, as you mentioned, to its lowest levels in 2009. And I think that's really the trend right now. It might be getting a little bit overextended, but I think it's really difficult to really bet against that trend right now.
And when looking at these alternatives to these dollar-denominated assets, what are you looking at? You mentioned commodity-linked currencies, also just alternatives. In general, in the short term, what do you see traders focusing on?
I think the commodity play is still going to be at the forefront. I think, we've seen some positive manufacturing news out of China earlier this week that's really added to the so-called green shoots theory or notion that the worst of the financial crisis is behind us. Anytime you see upside surprises to Chinese manufacturing data, again, I think it does kind of improve the outlook for the global economy, and it does improve the outlook for demand in commodities. And that's really what's driven the price of commodities higher, and really what's driven the price of commodity currencies like the Aussie, the Kiwi, and the Canadian dollar higher. So I think that is still the main play going on right now.
And what about you folks at Ruesch International? Are you focusing on this news about that talk out of Russia about a new global currency?
Not so much. I think, we've seen talk of that for some time now. I don't think there's any imminent threat to the dollar status as the global reserve currency. I do think that's going to be kind of an underlying theme for some time now, but I don't think there's any immediate threat, again, to that status of the dollar as the world's reserve currency.
And what interesting action can we expect in the cross pairs, do you think, at least to end out this week?
Well, I would keep a close eye on the yen crosses, particularly against the Aussie and the Kiwi. They have come under, or the yen has come under significant pressure in its crosses, much like the dollar. So at this point, I think the name of the game is still to be long any of those commodity currencies against either the dollar or the Japanese yen. I do think, as I mentioned earlier, that the move has gotten a little bit overstretched at these levels, and I would be putting my stops very close just to kind of protect against any sharp correction to the downside in a lot of these high-flying commodity currencies.
And what about market correlation between the traditional markets that we look at, equities versus currencies? We're seeing a rally in equities recently. How long will this play on traders, and will equities also be a choice of the riskier asset to choose?
Yeah, I think equities have also participated in this rally in risk assets. And I think, again, the same thing with equities. I do think the run-up in stocks globally has been somewhat overdone at this point. So I would be looking to probably capitalize on any downturns in equities, and I think that would also result in probably a mild bounce in the U.S. dollar.
And also, we could focus on the yen. The yen is considered one of the safer currencies by many traders, and we even saw the dollar fall against the yen earlier. What do you see for that currency? Do you expect the yen to still continue higher against the dollar, or will we have some mixed trading?
Yeah, I think it's going to be mostly mixed for dollar yen. As you mentioned, we did see the dollar really pull back across the board, and so that kind of relationship between dollar yen and risk appetite has broken down somewhat amid this broad-based U.S. dollar sell-off. So I think going forward, we'll probably see less of a reaction to swings in risk appetite in dollar yen, as you will see in some of the other yen crosses or some of the other dollar crosses. I do think, broadly speaking, if we do see a pullback in risk appetite and a little bit of a pullback in equities, then I would be looking for the yen to appreciate most against the dollar.
And do you have any thoughts about what Geithner said about China remaining confident in the U.S. economy? Do you think that helps to speak about the global macroeconomic recovery? Well,
I think there is some politics involved there, and I think there is some positioning going on behind the scenes. So I wouldn't read too much into what Geithner is talking about with regard to China. I think certainly going forward, Chinese demand for U.S. Treasuries and U.S. debt in general is going to be a key theme, and I think the fact that the Treasury Secretary is there in China pushing the U.S. agenda right now is really kind of testament to just how important China is to the U.S. recovery. So, I do certainly think this is one of the main themes to keep an eye on over the next couple of years probably. But I think for the near term, I wouldn't read too closely into Mr. Geithner's recent comments.
And Omar, if we could just wrap it up, do you have any advice for traders looking into the end of this week and next week, certain reports that we should look out for, or certain pairs that you think may move a lot, or other markets?
Yes, certainly it's still a busy week with regard to the economic calendar. On Thursday alone, we have 3 key central bank meetings. We have the Bank of England, the ECB, and the Bank of Canada. All of them are expected to keep lending rates unchanged at this point, but I think the market's going to be paying particularly close attention to the ECB and the Bank of England meetings for any potential changes in their quantitative easing programs. If we do see kind of surprises that either the Bank of England or the ECB increases their scale of asset purchases, then I think we could be poised for a little bit of a pullback in the euro or the British pound. Finally, heading into Friday is the all-important jobs number out of the U.S. I think a disappointing jobs number, worse than the forecast right now, which is for a loss of about 520,000 jobs. I think that's the kind of data that could remind the market that the recovery is going to be a very slow and possibly grueling process, and I think that kind of data could prompt some profit-taking in equities, some profit-taking in risk assets in general, and possibly a little bit of a bounce in the U.S. dollar.
Omar, thanks again for your time and opinions.
Thanks for having me.
That was Omar Esiner from Ruesch International with his take on the markets. And that does it for your New York Forex Market Buzz. If you want to connect with Omar and other Forex TV commentators, go to www.forextvconnect.com. I'm Julie Sinha. Join us right here at forextv.com later this afternoon for more news and commentary.